AI Nasdaq Spillover, Cross-Market Information Shock and Bitcoin Response. Welcome back to my weekly event study Research and Insights video. In this week and in this event study, we examine a question that is becoming increasingly important in the modern financial markets. This question is that does information originating outside the Bitcoin ecosystem influence Bitcoin price behavior? More specifically, can developments in artificial intelligence markets and Nasdaq-listed technology companies generate measurable spillover effects in the Bitcoin markets or not? Traditionally, Bitcoin was often viewed as a largely isolated asset class. However, recent evidence suggests that Bitcoin increasingly reacts to information originated in the broader financial ecosystem. And this raises an important research question. How does information travel from technology markets into crypto markets? And how quickly do different investor groups incorporate that information into their decision? Using an event study framework and information-speed segmentation analysis, we investigate how AI and Nasdaq-related developments propagated through financial markets and ultimately influence Bitcoin behavior. The result revealed one of the strongest examples of cross-market information transmission observed during the week. Let's begin. AI Nasdaq Spillover. This event study examines how development within technology markets influence Bitcoin during the observation period. Rather than originating inside crypto markets, the information shock emerged from the external financial ecosystems. Specifically, AI-related developments and Nasdaq market movements create a chain of information transmission that ultimately affected Bitcoin. The objective of this event study is to understand whether Bitcoin continues to operate independently or whether it increasingly behaves as a part of the broader interconnected financial network. What happened? During the observation window, technology markets weakened. AI-related assets experienced increasing pressure. Investor risk appetite deteriorated, and Bitcoin subsequently followed the broader decline. Importantly, Bitcoin was not the origin of the shock. Instead, Bitcoin appeared to have responded to information generated elsewhere. This distinction is very important because it suggests that Bitcoin may increasingly function as a receiver of information from external financial markets. What are these event study results finally? The event study analysis revealed a significant negative market response. Abnormal returns on the event date were negative. Cumulative abnormal returns remained negative during the post-event window. Volatility increased substantially, information delay was elevated, and most importantly, the D-ISS score reached 91 out of 100. And this was the highest information-speed segmentation score recorded among the major events examined during the week. The results suggest that investors did not process the information simultaneously. Instead, information diffused gradually across market participants and market segments. Cross-market transmission. The transmission pathway provided important insights into how modern financial markets interact. The information shock originated within the technology sector. The information was then reflected in the Nasdaq performance. Changes in Nasdaq influence broader risk sentiment, and risk sentiment affect crypto market. And Bitcoin ultimately incorporated the information through this transmission chain. This sequence demonstrates that Bitcoin's reaction was not isolated. It forms part of the larger information ecosystem linking traditional and digital assets market. In the next step, we want to analyze with together market structure implications. The findings reveal a significant evolution in Bitcoin market structure. Bitcoin increasingly react to information originated outside its own ecosystem. And cross-market spillover now represent a major transmission channel. This means that understanding Bitcoin increasingly require monitoring developments in technology markets, equity markets, macroeconomic conditions, and investor sentiment. And the traditional distinction between crypto markets and traditional financial markets appear to be becoming less pronounced over time. What is the main this event study research conclusion? Based on this evidence, this event is classified as a cross-market information shock. Among all events analyzed during the week, these events generated the highest information-speed segmentation score and reaching 91 out of 100. The findings suggest that external information ecosystem now play a central role in shaping Bitcoin market behavior. Rather than responding exclusively to crypto native developments, Bitcoin increasingly reacts to information originating in technology markets, equity markets, and broader financial networks. Importantly, this analysis follows the scientific philosophy developed in or published research, the US dollar volatility's spillover and competitive effect on Bitcoin return, dynamic, and mining behavior, that published in Applied Economics Journal. That research demonstrated how macrofinancial information can propagate through the Bitcoin ecosystem and influence return dynamics. And building on the same scientific framework, this event study investigates how information originating outside Bitcoin travels through multiple market layers before ultimately affecting Bitcoin prices. The evidence suggests that Bitcoin should not longer be viewed as isolated markets. It increasingly operates as a part of complex global information network where shocks, narratives, and sentiments can travel across asset classes before being incorporated into crypto prices. Thank you for watching this week's Beta G Dynamics scientific event studies, and wait for next video.